The chart of Cochin Shipyard for the last 1 year is quite interesting. The 12-month chart of Cochin Shipyard is quite a pleasure to read. Spike in volume, more specifically in February and June, but the price going its own way with minor variations, lesser volatility, and even the delivery percentage during the 12 months is within a range, not showing any great fluctuations. And so is the case with order size. And this ability of a share to withstand pressure of volumes is a strength in itself. And this leads us to the question, is it the right time to sail with Cochin Shipyard? Let's explore. I'm Vittal Prabhu with you, presenting the weekly video on Stock Learning Simplified. Hope you will find the video to your liking. Cochin Shipyard as a company is a PSU. It is into shipbuilding as well as ship repairs. It is set up in 1972 in its 50th year of operations as of now. Warships and submarines for Indian Navy, construction and repair, oil tankers and vessels for commercial businesses. But its defense related business is more resilient, and the ATMA initiative of the Government of India and the Make in India campaign is going to benefit Cochin Shipyard in a very big way. A very conservative shareholding pattern. Central government reduced its stake from 100 to 75 through an IPO in 2017. FIIs about 3%, mutual funds Nippon Life major holder, and ICICI Lombard under DIIs. Under retail and others, there is a bulk deal of October 2020 at 349 rupees. During last 3 quarters, there was change of about 5% from mutual funds and DII, which is absorbed by FIIs and retail and others jointly. That way, a strong shareholding pattern. Company has suffered COVID impact on its revenue, although it has maintained profit at a pre-COVID level, and its PAT percentage and EBITDA percentage have been quite excellent and growing. But the CAGR in revenue affected by COVID has been a small amount of 7.2% over 5 years. And in the absence of adequate revenue, the profit volume has suffered. COVID impacted business of the company in Q1 for 2 successive years, but the company came back in the subsequent 3 quarters, and that way it could protect its EBITDA, and we can expect a similar recovery during the ensuing 3 quarters. The company has always remained a strong shipbuilder rather than a ship repairer, but recently the company has taken initiative to increase the share of ship repairs, but the impact is not forthcoming, and ship repairs remains a poor second to shipbuilding, although margins are expected to be better in ship repairs. Cash flow of Cochin Shipyard is a mixed bag. Operating surplus has shown improvement during the last 2 years before working capital. If you take working capital changes, there are some years of substantial impact, and followed by the fixed assets. Last 3 years, hefty amounts of fixed asset investment is a welcome sign. And dividend wise, there has been substantial amount of dividend paid during the last 3 years. And 2017-18, 900 crores plus was IPO, followed by a buyback of over 200 crores. It has helped the company to increase the net worth of the company, but cash flow on an annual basis, most of the years, it has come into negative territory for the simple reason there is a heavy amount of dividend being paid, disregarding the profit achieved in terms of the government guideline of 5% of net worth or 30% of PAT, whichever is high, which is not a prudent dividend policy for any company. It is the impact of COVID which is showing the company's financials in a bad light. Equity, which has been quite significant. Debts are under control. Return on capital employed was growing till FY20, and debt as a percentage is well within limits. And the COVID impact is quite clear in the growth of net worth, which is a mere 7% over a period of 3 years, things should improve with changing times. Cochin Shipyard's daily chart is quite interesting. There is a big candle moving above forcefully. Stochastic RSI is also looking attractive. MACD cutting across the line, moving up. So also the OBV, which is in support of a bullish move. To get into specifics, see the candle which cuts across all the 4 moving averages at one stroke. It is quite big, sizable, although it is followed by 2 red candles. And when it comes to MACD line, it is crossing from below to above the signal line, which is clearly a bullish sign. When it comes to weekly stochastic RSI, we can see it moving up from the oversold zone, which is a positive sign as of now. And when it comes to Heikin-Ashi candles, candles with no lower shadows, signaling a strong uptrend, and daily chart is a collection of majority of bullish indications. Fibonacci retracement is quite clear. There is a support at the level of 351, 50% Fibonacci retracement level, and there is an immediate resistance to the current market price of 370 at 384, which is 61.8% Fibonacci retracement, and the next immediate resistance level will be 431 to a 52-week high of 491. The share has got a strong ascending channel with the 2 limits of 360 and 430. Strong triangles supported by volumes have been built across the channel starting from October last year, March this year, and even in June the upward movement was supported by volume. Volume was visible during the current month recently. Once the volume is in place, possibly the next triangle will take shape. If you take the year-end rates after IPO, it started with the 502 in March 18, and today it has come down to 370 plus. In the process, the market cap of the company has moved from almost 7,000 crores to about 4,900 crores. And the PEs, it has seen higher PEs because of falling profitability in the March 20 year, but now the PE is around 10.6. Business recovery after COVID, focus on repairs, expansion in place, and order visibility. It might be a right thing to sail with Cochin Shipyard. Cochin Shipyard, a strong company in its 50th year of operation, had a stake sale, IPO of about 900 crores, strong shareholding pattern. Return on capital employed fell because of the COVID impact on the revenue. Dividend is exorbitantly high, but debt is very much under control. Expansion and diversification to repairs is under progress. Order visibility is the strength. With business recovery and technical charts suggesting bullishness, company with ATMA NIRBHAR initiative and Make in India campaign is further strengthened as a market player. Hope you liked the presentation. You can access similar rich and contentful videos at InfoCard on Stock Learning Simplified. We look forward to your likes, shares, and comments. If you are visiting the channel for the first time, may please subscribe to the channel and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your support, time, and interest. This video is for purpose of information, education, and awareness only. This is not meant to be a solicitation or recommendation to buy, sell, or hold securities. Please seek the advice of a competent professional based on your requirement.